Hey guys, Mike here. So today we'll answer some questions, go over some comments and stuff, see what your feedback is, see if you have some answers for some of the people that watch these videos and stuff. You guys seemed to like it last Saturday, so I was like, yeah, they're easy to put together. Why not? Let's do it. And we're going to talk about Apple. We're going to talk about bailouts. We're going to talk about student loans, kicking back in, all kinds of stuff. All right, so let's get started. First one, LR Chand 9844 says, isn't Apple at risk if there's a big deceleration in China and yet BlackRock loaded at recent prices? Seems like they're setting things up for a big fall. Love all the contraindications in the market these days. Like rates not really affecting big tech nearly enough considering that is in the denominator squared in the valuation. Yes, I understand what you're saying. I understand Apple, it's not sitting there going off fundamentals. Apple's literally, in a way, not on its own fault or anything, but because fund managers have done this, because it is the largest owned stock in every retirement account that hedge funds managed, and all the different ETFs and stuff makes up so much of the S&P and the Qs and everything else that, you know, again, if they sell their stock, they most likely won't be able to get it back, so another fund manager will take it up. But understand they're going to ride this thing as long as they can. But if China slows down, yes, they're in trouble because they get a lot of their revenues from China as well. So yes, you're right on that one. And yes, rates eventually do take effect. They just haven't taken effect yet. But understand, this isn't abnormal for one stock or multiple stocks to start making up these indexes for hedge funds to pile into them for a number of years. Because, you know, back in the 60s and early 70s, you had what they called the Nifty 50, and like here's like the top 10, right? I mean, Intel, believe it or not, was actually a big stock by then. Kodak, Sears and Roebuck, a lot of these companies don't exist anymore. But this is where big money was piling into, right, for a number of years. And eventually they all go to the wayside. It always happens, right? You go up to the 90s, right here. Look at, you got Dell, all these. Look at these returns, by the way, on these stocks, right? But Microsoft's back then too. But you look at all these companies, you're not even going to recognize them. But these were big back then, right? Starting in right there in 1994, right? These were it, right? And so you just got to keep that in mind. That now, what do we got? I mean, it went from FANG to FANG and something else, and then it went to the Magnificent Seven. So again, all these stocks will fall eventually. It may take a decade or more, but you'll get them replaced. It always happens. It just has to run its course and stuff, where hedge funds find something else they want to grab onto, and everybody else follows and starts piling into it, okay? And the next one talks about bailouts, and Mark said, I think only GM and Chrysler were bailed out during the 2008 catastrophe. Correct me if I'm wrong, but Ford stood on their own. And it depends on your definition of bailout, Mark, and everybody else, because like they applied and received $5.9 billion in June 2009. The same month, GM filed for bankruptcy to help pay for investments in more fuel-efficient engines, hybrids, electric cars, and also to convert 2 truck plants into production of cars. So, I mean, if that's not a bailout, I don't really know what is. But again, I know what their CEO was trying to do. I remember hearing talk about it and stuff like that. But to me, that is a form of a bailout. And the whole bailout, yes, was to save jobs, because it would have been like 1 million jobs they would have lost and stuff. And those were good paying jobs and stuff. So yeah, I mean, that's a bailout to me, maybe not to you though. Okay, so just keep that in mind. Now, Scott M says, it's crazy how companies are mismanaging the company so bad for years and keep taking on more and more debt, and then all the big money sells out their shares and the company goes bankrupt, and then get a huge bailout in some cases, and the ones left with the less always end up being retail investors and taxpayers. Seems like a fair system to me. Obviously, he's being sarcastic. And yes, I agree with you, Scott. It's amazing how that works, because like I said, if you own the business, I can guarantee you the government's not coming to bail you out. And so just keep that in mind. That's why all I ask for is a level playing field. But again, you can't afford to pay off your congressman. They can write big checks. And, you know, it don't matter who it is. But again, it's because we allow these companies to get so big that if we let them fail, it's just going to be a complete catastrophe, right? And guys, before we continue, if you get anything out of this, please hit that thumbs up down there. I really appreciate it. And if you like the material here and the videos, think about subscribing. And the next one comes from BJ Deckreek, I think. It says, Mike, do you think a recession is incoming? If so, why are you even discussing buying equities at this point? I don't know if a recession is coming at this point in time. It's been pushed off to 2024. We thought it was going to be last year. That did not happen, obviously. And again, if you thought it was coming this year, if you didn't buy, from January to July, I mean, you're just sitting there missing out, right? So it's just one of those things. I play the market in front of me. And again, we're still above 200-day moving average. Doesn't mean the market can't crash and burn and stuff. But again, we're still in an uptrend at this point in time. And when I tell people not to buy, I said you have to figure out what stocks you want to do if you're dollar cost averaging in and pick your price point. Because long-term investors don't care about what's happening a month, 2 months, even 12 months. They're looking out far away, right? And so when they have their preferences, when something hits a certain moving average, when things are oversold, things like that, that's when they're going to get in. So that's why I'm talking about if you want to buy stocks. And plus, there's a boatload of stocks that have still really never got the rally, right? They're still sitting in stage one. And so you just got to keep in context. And if you're just one of those people, you just want to hold out until there's a next major crash, then you hold out. Like if that's your investment profile, then that's what you need to do. It's all about risk profile, okay? Next one's going to be from Mackay's, I think. Sorry if I mispronounced that. Mike, I believe lots of us are on the sidelines in treasuries and bonds. Do you think it's possible for government to go bankrupt? And God forbid, what happens to bonds and treasuries? Well, I mean, if the government goes bankrupt, I'll be honest with you, I don't know if your bond and treasury would be absolutely worthless, but I can tell you this, there's way bigger things to worry about that. I mean, if the American government ever comes out, and it won't be just them saying we're bankrupt, it'll be them defaulting on a payment, right? And you'll see a major, not just in the United States, around the globe, major crash in the markets, right? So your 401ks, your IRAs, all of that is going to be toast. I mean, because usually one default, and if it's really bad, if you're saying they're going to go bankrupt, that means one default leads to two defaults. It's going to be a hot, hot mess. I mean, it'll feel like there's anarchy in the streets. If anybody who lived through 08 can remember watching the TV as this was going on, it was a mess. That would be that times 10. Okay, and so that's why it's so important, because so many countries have trillions of dollars invested in the U.S. So if that happens, I wouldn't sweat your bond and treasuries. You got way bigger things to worry about. But if anybody knows exactly what would happen with the bond and treasuries, let them know, because when a company goes bankrupt, you actually got a chance for them to sell assets, get money back, all kinds of stuff. There's different ways around it. The government, you obviously can't sell the government, so not sure on that one. Now, Bob Droid 5201 says, "Hi Mike, it will be very helpful and easier to follow your explanations if you or anybody who knows posted moving average values and corresponding colors for charting." I told him I was going to talk about this because it sounds easy, but understand, in TradeView, which is what I use, here's the moving averages, right? And I just pulled up any chart. I understand I'm colorblind, so I don't even care about the colors myself personally, but usually in some kind of thing you use, when you hover over the color, it'll tell you the color. In TradeView, it does not. All right, I think that's black. That's my guess. I think 100 moving average maybe is what, blue, but it doesn't tell you that. Okay, and I can't find any setting that would label the color either, right? Or label the value. Like I went in here and clicked every box I can. I don't see anything that even says the value either. And of course, the values will change every single day because obviously stocks move around and stuff. So it sounds easy. I'll give you that one. So if anybody knows any settings in there that would show the moving average color or the value, let me know. I've clicked on everything I possibly can. And unless you're just hovering over it, that's the only way it's going to tell you. Which is why I usually say this is the 50 moving average. It just broke through it. The 100 moving average is, of course, right below it. It's coming up on. That's why I usually verbally say that. But yeah, and that's why it's not that easy. So I just want to put that out there and answer your question on that one. I wasn't trying to ignore you or anything. And when I ask you if you're colorblind, it's because I'm colorblind. And so when you're asking for the colors, I thought, well, maybe he's colorblind. So next we got Into the Wild with Jeff Ruma. And you can see I've been investing in real estate. This is when we're talking about the real estate market. I've been investing in real estate for 17 years now, Mike, and this is my take. I wouldn't tell someone who wants to buy a house to buy one right now, but I would tell them to buy one before the Fed starts to lower rates. Because just in my opinion, if people think houses are expensive now, when as you show very few people are buying because of high interest rates, what do you think is going to happen to home prices when the Fed starts to cut rates? My expectation is there will be a flood of people buying, driving the prices up. And you could be absolutely right on this, Jeff. I guess the other side of that coin is if the Fed's cutting, that usually means something bad really happened. And so if we're in a recession, I don't think we're going to have to worry about people buying a lot of houses in the recession, obviously. Because again, this is that problem. We've never had this kind of supply issue like this. This supply constraint on real estate is just a mess, and I don't think anybody knows what to make of it, to be honest with you. Especially, and again, it's different in every state. So like Florida, not even worried about it. You know, the price is going to stay high because a lot of people moving here, and we don't have a whole lot of supply. They can't build them fast enough. In other states, you might have a lot more supply. So each state is different to me, Jeff. That's just my opinion on it. So we'll have to see. It depends on why they're cutting rates. And then lastly, we got Bill here. Says, thoughts on student loans kicking back up in September? Deflation question mark. Are Feds going to postpone it again? The Fed can't postpone it that I'm aware of. I believe that's what the lawsuit said. The president can't postpone it anymore either. So it's going to kick in, I believe, in October, if I'm not mistaken. And people don't have to pay. They have a 12-month time frame to start doing that if they want to start paying. But I've been very clear on this. What I've said is going to level the playing field and put us back in somewhat normalcy until all student loans get kicked back in, until all the payers are coming back to the table and everything like that. And if you're seeing, as I showed you the other day, if you're seeing default starting to curve up already and you don't have student loan payments, common sense tells me that's going to get worse, right? And so the cars will go first, then the credit cards, right? But the other thing is, we've just never had this equation to where so many people like you and I are sitting in a house with so much freaking equity, right? So you got this huge backup plan. If you need it, you can just sell your house. You can take a HELOC out. You can refinance, even though that'd be horrific to have to refinance at a large rate. But you can do these things, right? And all of a sudden, this money's at your disposal. So it's different. But yeah, I think student loans are going to have a huge, huge negative effect, especially in people that are 24 to 40-ish, somewhere in there. Because usually those are the people with kids, a lot of bills. Like they're the ones usually out there trying to buy the furniture, do all the stuff. They're expanding. People usually, 55 to 75. They're actually contracting down, not spending as much. They're going on more vacation and stuff, right? And they're usually empty nesters. So, yeah, I think that's what's going to happen. Let me know what you guys think about any of those questions and stuff. I'd love to hear from you and everything. And just let me know. I mean, if you like this format, I don't mind doing it and putting that on Saturdays for you. It's fine with me. So just let me know. Appreciate all you guys who watch. Please hit that like, subscribe button so more people can find the videos and stuff. And if you have questions, put them down in the comments. Be more than happy to put them in there. All right. Hope you have a good one, guys.